this isn't, an opportunity that's going to be this way. Again, this is kind of how investors begin to think, is like, oh, this is the can't stop, won't stop market. It's just going to continue to do this forever. And that's just not the case of how that's going to work. Okay, so let's talk a little bit about the markets, what you need to know before the bell this morning. We're coming up to the end of the month. Of course, that's quarterly rebalancing. And again, this market's done nothing out of the ordinary. We've stayed well confined to this trend channel that we've talked about now repeatedly for the last few weeks. Again, markets sold off for the last 3 days. Futures are pointing a little bit higher this morning, so we're going to see a little bit of a bounce back up towards the top of this trend channel. So again, we get back to the top of that trend channel around 5,200 or so. That's going to be, kind of the setting new highs, of course, as we continue to kind of make this elevated run. But again, the one thing to keep a watch on, and the one thing we keep kind of watching importantly here, is the angle of this ascent that we're seeing in the markets is continuing to be very, very steep. This is a very sharp angle of ascent that is going on with the market. So again, it's not unusual for markets to climb, and again, that's okay, but this is a very, very sharp angle, which is a little bit hard to continue to support drifting asset prices in the overall market at this degree, right? So it's just this very accelerated increase. We've seen these before. They don't last long, and when they do have this type of ascent, again, like here, we had a very similar kind of advance, not nearly as long, but that is more of a sign of exhaustion at some point when you get there again, because you get all the buyers into the market. Everybody that wants to buy stocks have bought stocks. Again, you have this rush of investors to come in at this point. Again, this is why we're seeing, basically every asset class go up. Bitcoin, gold, stock prices, you name it, it's all going up at the same time. And at the same time, you have this very sharp increase in buyers trying to rush into the financial markets. There's no risk for the downside, at least that's what's perceived. So again, volatility is very low. That doesn't last forever. It can last a lot longer than you think. And this has been a very, very long stretch at this point. So again, there's nothing wrong with this. Again, continue to participate as we've talked about. But this isn't, an opportunity that's going to be this way. Again, this is kind of how investors begin to think, is like, oh, this is the can't stop, won't stop market. It's just going to continue to do this forever. And that's just not the case of how that's going to work. So again, with these deviations we've talked about before from the 200-day moving averages, from other moving averages, deviations of outside normality, those are going to correct at some point. The question is only what causes that correction to occur and when will it occur. And again, those are the things we don't know, but that's why we have to be aware of what's happening currently. And again, we see this repeatedly throughout history, and when we're in the midst of these type of advances, we tend to forget about history a bit. But we've seen these type of actions before. They always end in a correction. You're going to get a pullback at some point, but the only function is a question of time. I know we have been talking about this a lot lately, but this is really just the drive in the market, that overall psychology. So that's what you need to know before the bell this morning.